It's the when you sit back, if you accept the idea, as I do, and as Bob Chapman does, that the gold and silver markets are being manipulated.
I'm back.
The price. All right, Bob.
Yeah, I get cut off
again. I'm in the middle of something here. Let me just finish up what I. Here's a question that I was going to start to address. Given that you and I believe the gold markets and silver markets to be manipulated, what is the rationale for investing in a market where the price is being manipulated? On the face of it, it would seem like there's not much point to that. But the question, of course, is how long can the manipulation continue? Because when that manipulation fails, when they run out of the energy to continue to suppress the price, that price is going to drive up. It's going to be like a spring that's been compressed for a considerable period of time, and all of a sudden you turn it loose, and it should explode. So,
well, I agree with that. Now, I think you're right. And I think they're getting close to the end of their rope because they can't have any gold or much gold left. And we know that because they've been shipping gold as a compound out of the country, when in fact it was coin melt. And so they've had other people selling into the market for them, and they're replacing it with the coin melt, which the recipients would take and re-refine into good delivery bars. In other words, the U.S. government would not be using coin melt to trade if they had good delivery, which they don't have. And that's one of the reasons why Germany has demanded their gold, and it's been 3 months they haven't gotten it, and Dubai from London, and they haven't gotten theirs either. It's my suspicion that all that gold's been sold. And how much they get left, I don't know, but I don't think it's an awful lot. And once that's gone, they can't affect the physical market. But there's another thing that's even more important. Someone has to tell me, where else can you go with your wealth? Where else can you go with your money? You can't go into residential or commercial real estate because it's still descending in a big way. You can't go in the bond market because of all the monetization that's going on. Foreigners are going to demand that they get higher yields for the different kinds of paper that they purchase in the marketplace, namely treasuries, agencies, etc. And so you've got a situation where you've got a stock market that's headed back down over the next few months to test 6,600. There's no place else to go. Think about that. There is no place else to go. So you're stuck.
I think what you're saying here, or what you may be saying, is that there is no obvious place to invest your money in anticipation of, for example, stocks or bonds or whatever, in anticipation that your cash is going to appreciate, but by default you wind up simply preserving your money. Now, the gold will at least preserve your wealth, and it may appreciate, and it should appreciate. But if there's no place to invest, then you have to look for preservation. You have to focus on preservation rather than investment. Is that roughly what you're saying, or is it...
Absolutely. And, of course, we have the big springboard that's being suppressed, and it's going to be let go sooner or later. Mm-hmm. And it's just like a slingshot. And it's going to happen. So you keep on buying gold and silver-related assets, and it's the only way to go. Whether it's coins or shares or both, doesn't make any difference. I got to read something to you here. I wrote this morning, and it's very important. The Fed previously said they would monetize, and that means that they were going to buy with money they didn't have. They were creating money out of thin air to do this. Said that they would monetize $300 billion in treasuries. They said they would monetize $600 billion in agencies, Fannie, Freddie, that sort of paper, and $1.2 trillion in toxic waste, which is CDOs, which are collateralized debt obligations, bonds that have inside of them mortgages. they have now increased those numbers by $850 billion to almost $3 trillion. Now, who says we won't have inflation? I mean, that's a colossal number, and this is before September 30th. I mean, what are they going to do for their next act? And so, you know, over the next 2 years, they in the Treasury will go over $20 trillion. Easily. Maybe as much as 30 or 40 trillion that they're creating out of thin air. Inflation has got to go ballistic, and it will.
I was reading an article today, and I can't verify the numbers, but my recollection is that the author contends that there's about $4.9 billion worth of gold that's ever been mined on the face of the earth, 160,000 tons, if I recall correctly, 4.9 trillion, in gold. And he said there was, if I recall correctly, there was about $60 trillion in cash circulating the gold. That was not just American dollars. That was the equivalent, I presume he meant, including the Chinese currency and the Russian currency and everything else. But in terms of cash, my recollection is that he said 60 trillion. Now, if that's correct, anyone can look at this and say, my God, if they're going to increase the quantity of cash by 3 trillion, that's 1/20th, that's 5%. You've got to have 5% right there. And if it's going to go up by 10 trillion or 20 trillion or 30 trillion against a total global cash supply of perhaps 60 trillion, you can see that this inflation is going to be something to tell the grandkids about, because you're not likely to see it happen more than once for the whole globe in your lifetime.
Well, that's a good take on it, and it's right, and it is going to happen, and we've been right about everything, practically, for the last 10 or 12 years, and, over 95% for 20 years. We've had a staggering record, and that's where we're headed. And I was talking about the Walpengate earlier and the things facing the president. Also, the Rasmussen poll came out, and it moved into negative territory for the first time. Now, it started in January when the president was gone into office on the 22nd of that month. And as of June 21st, the Americans expressing strong approval of the president were 32%. 34% expressed strong disapproval. What does that work out to? On a scale of 100, it's probably around 48% approval. That's a ballpark, within 1%.
Okay.
And we had predicted by September, October that he'd be down to 40. And he will be. Now, he's facing all that. Does he really want this Walpengate to bite him? It's going to, unless he leans over on it. I've got a bunch of questions here today.
Go ahead.
Do you mind if we get into them?
That's fine.
This is from Tim in Tennessee. Question for the show. If the U.S. dollar is devalued 1 for 10, what would be the price of oil and precious metals? Well, they would both go up substantially once that happened, because they're both presently denominated in dollars. And it would take 9 times more dollars to buy a barrel of oil or an ounce of gold. If you don't put a slide rule to it and ballpark it, you're looking at $9,000 gold, I guess.
Mm-hmm.
So that's something to think about. And that's essentially what he asked. This question comes from Chris. What is the difference between dollar devaluation and dollar collapse? Or are these terms used synonymously? If so, at what present devaluation would constitute a collapse of the dollar. The dollar's around 80, 80 and a half, somewhere in there on the USDX. Recently had a high of 89.5. Long-term support a year and a half ago, 71.18. A dollar devaluation in the marketplace would be the dollar going to 71.18. A collapse would be breaking down through that support level, because the next stop is 65, 60, 55, 50,